Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Oh yeah, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Make sure you're doing your part to come on in every day if possible. If you got the time, you got the interest, and you just want to see where things are going. It's a Saturday, 10 p.m. my time. You're just getting up if you're on the East Coast of America. And it is a nice weekend, low liquidity, 2 12-hour candles later, and we're back to where we started, basically, with the idea of the liquidity to the upside, which didn't really go anywhere. I didn't take a look. I chilled out with my family, so let's see what's going on in the charts. So as we took the dump yesterday recap, we bounced off of the 1.618 of the bearish trend-based fib extension tool of this impulse retrace drop to the downside idea, 1.618, and kind of bounced off that region, and we're consolidating around, determining whether we want to go down further or not. We went over the idea of the retracement into the vector candle to take out the liquidity within this drop down, because there should be still an imbalance in shorts. Let's just update this really quick to recap. All right, so here we go. So we got a nearly 12 billion to the right. Doing that scalp idea yesterday, we noticed some shorts entered here for a large amount, and they're still holding on, so that those get added to the stack of ideas to be taken if it does retrace up into this region. So that's where I'm thinking about it going, at least all the way up to these bubbles at 23k even. That region right here looks like it would be nice to take. How will they go about doing that? They'll probably induce more liquidity in the meantime and then go up in that region. So that's just the 1 minute time frame on high block. Let's go look at the heat map, see if anything's changed in that. Doesn't look like anything has changed that much, but we'll see. Perhaps I'm missing something here. Alright, so 12-hour doesn't really make sense why you'd focus on that. To me personally, it's just only 12 hours of liquidity inducement, so it looks pretty even Steven on that anyway. So we look at how this happened over the last 7 days, and yeah, you had, of course, you know, it looked like it was upwards of like 12 billion here that they just went back into on this time frame, more than that, and they just grabbed all of it, and they've been consolidating, getting this thicker. So you can see when we first dropped, there's under a billion here at 22,700. Now that's up to 4 billion at 22,700. So the meaning of inducement, folks, is they entice people to enter. Consolidations are simply that, just enticement ranges, if you will, for inducement of liquidity. So let's just talk about what consolidation is about. So we have, boom. Consolidation is when price moves into a clear trading range and shows no willingness to move significantly higher or lower. When price consolidates, it indicates the market makers are allowing orders to build on both sides. So you do the impulse swing and see equilibrium. I don't know why it's taking so long to load a single image, but that's what it is. So we're in the consolidation to go down or the consolidation to go up. There's only two directions it can go when it enters consolidation, and you try to look for an expansion, a CER, consolidation, expansion, retracement, consolidation, expansion, retracement, consolidation, expansion, retracement. That's all you look for in consolidation thing. So it's building up for an expansion. In which direction? A continuation to the downside, or to retrace up in order to continue down. So we went over the idea of going back into the fair value gap, and what they would do that for is their inducement of this area to get it caked up with liquidity, and they got 4 billion ready to go, as opposed to 2.5 just below that. So in the immediate 7-day, it looks like this would be the place to go, and you got 4 billion up here as well, and then you got these yellow regions of 4.5 plus all up in here, as opposed to less down in here. So they would go up and take some of this out before returning lower, just based off of this image alone. And we go to the 1 month liquidity map, heat map. How y'all doing out there? Good? Let's check while it's loading. Yo, 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 Dingo, what's going on? Booyah. So let's go back and see it's load. So you got 14 billion, 15 billion, 15. So they've caked up this region again for the, they're trying to stack it with the yearly time frame. This is just looking really nice for an upside move. And yeah, it's much thicker up here than it is down here, but this is more immediately available. So that they grab that before they shoot up. Do they retrace up and then go down and then go up? Up, down, up, left, right, BA select start, the Konami code? Or did they, yeah, as of this moment, it looks like there's more getting built up here on that time frame now, because we knocked out some of that. Now, if we look at the 3 month, I remember it was caked all the way down. Yeah, it was. So the 3 month is looking more spicy on the downside in terms of liquidity. It's caked down here in the 40 plus billions down here. All the yellows are 45 plus. So you got very few of that up here, even though you got 20 billion, 10 billion, all this stuff is filled to the brim. Like they could come down here just as well. And go into the 6 month. That would be the 60 billions if it gets to this aqua color. Clearly, when you break this 21.3 region, you're going into a possibility of a larger retracement. Although going down into this for the liquidity grab to knock out this whole range would be the smart move, to just get all of these traders out and then get more people committed to the idea of short before they squeeze it up. Similar to what they did here is they they bounce off and they induce more long liquidity, and then they came right down to it. Like they would maximize this pool as much as possible on this upside idea. So they would, go down and appear that it's weakening as much as they can to give it that idea. I don't know what type of algorithms they run, but they must have something that kind of gauges how many people are paying themselves and how many people would commit to holding it or something. I don't know how they gauge how many they should pay over others. Clearly it moves towards the imbalance, of course, where you see how they caked it up real good and then they came down and snagged it, and for whatever reason they left that 15k there, and then they came up and snagged all these guys. And so now you're getting, from here, from February 16th to now, you've enticed an extra 40 billion or so in this 25.6 region. So how much more lower do you go into this till you make this target juicy enough to just shoot up and grab it like they did before in January? That is the question. Alright, so we bounced off this region on the general gist of things, where we went to this consolidation range diagonally. We came back down halfway, bounced up, and now we're back in this 382, 236 diagonal fib region. And if you you know, we went over how these fair value gaps are made, and then, so this is representing all the liquidity that's up here that they can come back to take. And we'll go to a clean chart and just take a look. Well, clean as in it's where it was drawn without the diagonal fibs yesterday. And we talked about going up to the 618 of the impulse to the downside. How do you get that? You take the retracement tool, you drag it from wick to wick, and you can just set your settings on different templates. If you have the basic one on your chart, and you can see different pockets on different impulses. So you have this impulse here from the bottom of this to the top of this range here. That's where I was saying to watch it. We bounced off it before at the 0.65, and then we got rejected on the bearish trend, the trend-based fib of level, and then came back down, and we burst right through it, and then we ended up hitting this bearish trend-based fib level at 1.618. So it doesn't matter which chart you're going to look at, the value will differ on whatever chart, but the math will generate that level at whatever chart you're on. And we've been meandering around the getting rejected off the 706 possibly, but when we go back through it, this confluent zone of the 618 of this external liquidity range versus the 618 of the internal liquidity range, somewhere in this region at 22.9, and 22.9 would put you about here. 22.9, yeah, we put you right around knocking out that bubble, which makes sense because that's a large amount of liquidity right there, $228 million. This guy getting induced the other day makes this whole region a target up to 23,174. So 23,174 puts you all the way out of basically up here. So if you come up to this region, doesn't mean automatically just take the short because you cleared it, but you would see an initial rejection, if you will, at the 618, similar to what this bounced on the 618, came up, came back down beneath it, and then came up. So, you know, you could realistically see a scalp opportunity and go light and just get in and get out if it goes up to that region. And so 2 hours, 12-hour candles later, the 12-hour is now in our favor, and we got the nice pocket on the Williams turning green. We're in a good position on the Williams now for the 12-hour, which was previously not in a good position to take along. And now let's go to the 6-hour, also in a good region. This is where you would see on the ultimate kind of nice confluences like these 5s popping up. Let's see how the 22-hour reset on us. Came down nicely. It's in a nice green region. Could it keep going down? Yes, it could. But let's go to the 15. Oh, whoops, we skipped the 4-hour. 4-hour. I just wanted to see if 15 was. So the 4-hour has been steadily kind of holding its own, but maintaining, staving off a dump of sorts, and you're still good on the Williams here. And so the hourly is not in a good position, stochastically speaking. It's getting pinned, trying to stave off further downside. and you had some money flow, bullish div that took us out, but we didn't really go anywhere. We've been seeing the RSI go up with price not really doing anything. That's kind of like hidden bearish. So is this necessarily a good position to enter at this exact moment in time? On the hourly, no, it is not. And we go to the 30 minute. 30 minute also meandering around, not really in a good position. And the 15 minute also meandering around on both. No clear sign of entry here yet either. So everything above the hourly is in your favor. The 4 hour, the 4, the 6, the 12, the 22, everything's getting into that nice region. The daily looks good, the 3-day looks good, the weekly is the one thing not in a good position either. So let's go to the weekly really quick, just take a look at that to remind ourselves. So it looks like we're going to probably chill out around here until the weekly candle close in a day and 11 hours. I could be completely wrong. Always preface these things with a little bit of a twist of uncertainty because you never know. So the weekly is kind of curving up, staying around here. There's nothing really showing much of anything. You could bounce off the 50 on the money flow and the RSI here and go up and pin this. It doesn't necessarily mean because it's high it's got to reject when things are underway, especially when we showed that the 2 week had that rising sun event occur. So we had this starting to play out, which hasn't been seen since March of 2019. So this is occurring again, so that's noteworthy as a thing that could happen to keep things going forward to the upside. So basically you want to see we were talking about how this could go, even though it was curving, it could possibly still come down some more. So we are seeing that because the Williams could still come down in a nice manner. It still has room to come down to this green position. This is where you want to see it together with this down in the green with this on the Williams. So the daily could come down a little bit more on the Williams. And you got that initial rejection off the external 706. So you could look at this trapped in this range here from the external 706 at 22.5 down to 22.170. And you could just be playing these ranges right now if you were scalping, but most likely the altcoins are doing some stuff in the meantime while Bitcoin's chilling. There's probably some gainers out there. So the trend won't be until you get above this ATR here. You're not going to really see the trend looking bullish at all. It's just consolidation or continuation, bear flag continuation to the downside, maybe double bottom down here at some point. Let's go see what the liquidation level shows on the lower time frame for these 100x people. Definitely the weekends are low liquidity, so your liquidity stands out because it cannot get disguised as easily. Looks pretty even Steven on here. They generally go and knock out. If they go knock this one out, then they'd likely go down to knock that one out. So whichever one they knock out first, that's the liquidity grab prerequisite to possibly see the reverse come in. So if they go down here to knock out these 100x guys, then they likely go back up to that region, and you could just be range trading this entire thing, and you just wait for one of these to be the case, where it's either this going to there or this going to there, and it doesn't necessarily need to take out all of it. It could go right there and stop and then go back up. And all of these things are fractal in nature, so if you were to take a fib retracement tool and pull this all the way up, it would coincide with the 618, and you could look for the 618 bounce or 706 based on the liquidity. And you could chart these off in even smaller time frames if you like. So it looks like it's just doing an inducement trap. We saw how these entered and created a thicker band on the heat map, and how that heat map changes. And so we were looking at the 7-day. Let me pull that up real quick. But you see how they enter more, and then it creates a thickness. And that's about it. I mean, I don't think my sentiment changed at all in the 2 12-hour candles since last stream. I still think that coming up to this region would be the smartest move on their behalf if they want to get money, and that's what the whole thing's about, is move in the direction where the most liquidity lies, and they induce some liquidity in that's staying there, as opposed to these guys, which bubbles are smaller. So yeah, it looks like it's still so yeah, let's take a look at the chat and see what else is going on. Anyone got anything they want me to look at? Anything at all? We got 81 views. Wow, thanks for coming on into the live, sharing your essence with me in this eternal moment of which we all share an inextricable part. What would you guys like me to look at? I don't need super chats. Swing B. Swing B. Swing B. This is our place. Take you there. Ooh, we got a rocket ship. Rocket. See, you got a nuke, and then 5s, 4 5s and higher. You know, telling you they sometimes pop. Sometimes you get that suppression. All right, so yeah, I like that. Let's take a look. Take a look. It's in a book. So you're getting a bounce at the 786 region here. This is a place. I'll take you there. Yeah, you got a rejection wick. Fun fact about these wicks: if you take a if the body falls within the 382 region, so if you have a body that falls between the top wick and here, then that's objectively like a hammer, as opposed to, you know, your opinion about it. So the 382 in this region will tell you if it's above, if the body falls within that from wick to wick, then that's objectively a hammer, not your opinion about it. So yeah, that would have been a really good point to get in right on the rocket ship. Let's see how the 1 hour looks. So you got 6 time frames oversold a couple hours ago. I mean, the 15-minute is high, but let's just see. You got the rising sun coming in. You got the MACD crossing on you. It's coming up here on the hourly. You got that double bottom action occurring. $15-minute is high, but yeah, those rocket ships. Let's try to find where the last rocket ship on this was and how that played out actually. So there's a rocket ship here. So the rocket ships, how do they lock in, and why is there a rocket ship here and here and here but not over here? Now, the way the formula works is it needs to close in that state for it to remain. So and these are daily candles, so any time within this day here or this day here, there could have been a rocket ship that appeared and disappeared, but it didn't lock in on the daily close, so it doesn't mean this is inaccurate per se, you know. It's not here on the daily time frame right now either, because it appeared on a lower time frame within that daily candle. So you go back in time. Let's just go back here before the takeoff, and then drop to a lower time frame. So once again, it's candle close specific formula. So ideally you want to see it close in on a higher time frame like the 4-hour did here. The higher the time frame that it closes in, the more likely it is to be like a rubber band that's stretched to its maximum and it rebounds back. So it's the elasticity of the probabilities of all those time frames being stretched, and then the rocket appears at that point. And then the higher the time frame that it's locked in at, the more likely it's going to rebound up from there. So a 4-hour time frame lock in, it looks pretty good. You'll at least see some sort of bounce of some nature. So you had that happen on the 25th, and you had that happen here, and if you just held it, that was literally your bottom. Even though it did come back pretty hard here, but this is why you pay yourselves. Like if you didn't lock in something, sorry, you could have added to your position. Like you could have taken something out there and then, you know, move your stop loss into profit or below the ATR here, and then when it gets back down here and didn't close here, you could have added some more. And this is how you like scale in and scale out of positions, take profit, and so on and so forth. Alright, so yeah, it looks like the rockets play out on this. There's sometimes some assets where the rocket ships still lead you down after that point. So you should always back test. Just because a rocket appears doesn't mean it always plays out. It looks like it plays out pretty well on the 4-hour here if it locks in on a 4-hour. So I'm not drawing, I don't need to draw necessarily any things just yet. I mean any, you know, trend lines or anything just yet. I'm just back testing the validity of the symbols that get locked in. So you did lock in a 4-hour here, and you did see them back here. They didn't lock in the moment. So somewhere on a lower time frame they did lock in, but it actually locked in on a 4-hour. So that's pretty good, to say the least. And yeah, you got that falling wedge juice, you know, by our man Rainier here. You know, you got that falling wedge formula at the 786 bounce. Like this is looking pretty good. Swing B to the upside, dare I say it. Trend based fib extension tool, we can go from here to here, impulse, retrace, and get the path of the, you know, the 236 points of resistance here as you traverse up out of this region. The proper retrace zone, the proper impulse would be here actually, because it's a 4-hour thing and it went straight up to that region before retracing. So here's where your thing would be. And then yeah, so if you can't hold above this 236, like, you know, the pole is will induce your mindset to wait till the very end of the impulse. But ideally, you'd like to see it go up to here, which would be a 100% gains. But yeah, that's a long ways from now, obviously, because this one took you a couple days to get up to the 87% range. So without, realistically speaking, you could do that at any moment, of course, but you got a lot of resistance along the way in terms of this range here, the 382, this previous high region, which also happens in this where it wicked off here at the 236. So you have a lot of resistance that could possibly occur here. And if I turned on the order block finder, like I can turn on order block finder on Momentum Master as well, it'll automatically draw these kind of bearish order blocks and stuff. So you'd be able to say, okay, well, maybe I would get rejected at this bearish order block up here. And you can basically see that, well, 32% gains is pretty good too. So you could, I don't like leaving that on, but it's based off consolidations and swing failure pivots and these wicks. So it does the math and the hard work for you, but you should know what they stand for as well. Like the order block would be where it gets sold off here, where it got rejected, this wick. So this wick is going to be something to contend with. So you can put that here, and you can put that there. And so yeah, these would be things that you would kind of encounter in terms of possibilities where it would get rejected. And then your immediate 618 rejection could occur here too, like seeing where the 1 hour stands. You're already kind of overbought on the 1 hour by the looks of it. So you could see the 15-minute come down here, or it could just keep going from this point. Once again, you bounced off the 786 and going to the 15-minute. You had some more rockets appear there. That was just before the 4 hour closed, so it got locked in on the 4 hour as it closed kind of deal by the looks of it. Yeah, I see what you mean, for sure. That was like without question. Like the one that you gave the other day, and it took me a while to find, was like a little bit harder. But you see how you have the baseline, the adaptive beneath it too? So the adaptive moving average is kind of like a dynamic support and resistance thing. Here you got the weighted moving average, so it has this range here that shows you where it could bounce off of. So this one is above, so it could be this kind of resistance point. And here you have the support point of the adaptive moving average. So you flipped kind of bullish on this swing B idea. You got this same cloud resistance, which also coincided with this 706 of the impulse. And so you got all these confluences of possibilities where it would like not hit the measured move, or you could scalp it and then re-enter on resets of stochastic and probabilities. So like you could see it kind of break out, get resistance, come back and look for some recharge, and then come up like that. And so, where is that going to fade? Is it going to be here? Is it going to be there? Where? And so that's where you lock in and you re-enter perhaps. You look for the 618 rejection and then come back to the 706 continuation also on the breakout here. So you can get like 14% out and then re-enter and then do another legger up for like 25% or something like that. Just an idea. Any other things you want to look at? So you don't need to, on Momentum Master, you don't need to, I like having the history on. Like you can turn it off and just have the latest and the greatest candle, what's it called? The symbol. It does look a little bit busy, I'll give you that, like having all of these on there. But I like to look at it because I can see how much a 5 gave us last time it appeared, as opposed to just seeing this one, like where was the last time it had oversold and how accurate was it. So I have, you know, even though it has the 6 here and that's, and you know, it played out on all of these, yeah, you could turn off. I see the narratives that played out within each impulse before, so I can see, okay, your 4s and your 5s were pretty strong here, the 4 was pretty strong, the 5 here got suppressed, what was going on there? Maybe the daily was high or something, you know, and you tried to see why did it get suppressed. It was probably had to do with Bitcoin dumping. And so, yeah, I mean, it helps me to see where the probability of a 6 playing out or not occurs. But it would look ugly to the untrained eye, I can give it that for sure. But does it need to look pretty if it works? You know, I think it looks pretty with the blue and the purple anyway. Either way. So, yeah. What's next? Let's get some more. Come on. I'll just take this out just for giggles and wiggles. You guys got anything else for me? What's going on? Why is my connection? I live in like a, I bought like a man, they call it a mansion. So like the internet is like shared with everyone inside the mansion complex or whatever. So it's kind of annoying. Because the bandwidth is not as great as I would like. So yeah, Bitcoin's at the bottom of the Keltner channel on the 4-hour, the 6-hour, the 12-hour. All of these things are nice, and you got the baselines beneath the price in a nice manner here. On those higher time frames, you know, you just got to see the hourly, see how the hourly plays out here. Does the hourly get tries to attempt to come down some more? You have this cumulative time frame volume delta, so this is adding up all of the volume disparity over the different time frames, and you had a bunch of sell-offs down here, people selling out at the bottom here, but we're maintaining the price so that there's somebody absorbing the sell-offs, so someone's stacking a position here because the absorption of this large pressure sell-off here, does that absorption always hold? Here you had absorption and then it ended up getting surged up here. Here you had some absorption and then some buying, but eventually you had higher time frame suppression push you down, and the thinning of the cloud expressed there wasn't clear evidence of continuation. And yeah, you also had the baselines above the price here, see? So the baselines were struggling above the price, whereas here you have the baselines nicely below the price. Nicely below. So that's where you need to see it. And they come down and scoop it up and then take it up to the upside. And then you wait for the crossover event with the DNA helix. Similar to here. And take it up. It's like the criteria is there. You just need to pay attention to it and use it. Criteria is there. You We had that baseline cross, and we talked about a scalp. We even took the scalp, but you just conservatively, it was just after a large dump. It wasn't going to immediately just go back up in so many hours. We knew what we were getting into. Also, the cloud is thick. The cloud is starting to thin on the hourly, but still meeting with that initial resistance of the cloud itself and the momentum it brings. So you could see this hourly reset. It's all about the hourly reset here. Like, what is the hourly going to do? Does the hourly in the 15 reset you down to the bottom of the range, and then you get that nice scalp entry down here? And then you kind of get another bounce region. That's about it. I'm not going to stay on for very long. I'll stay to the end of this hourly close, and then I'll bid you adieu unless there's somebody with something cool to share. Something cool to share. What can I share today? Do I have anything interesting? Let's see. Maybe you saw in my screenshot or whatever, or the loading screen, you see this like kind of dagger thing floating in my hands above my head. This dagger is a Tibetan ritual dagger from Tibet, and the three faces around this dagger are the three poisons that bind us in our circle of rebirth and reincarnation, if you will, the one soul collective representation of those things, fear and greed and ignorance, and the ignorant people get trapped. And that's what we're studying with the liquidity, is those ignorant people that open trades and snaps back on them and they're underwater. So we're seeing the ignorance, and then we're seeing the greed of the people that refuse to pay themselves, and then we see the fear of the people that are trapped. It's a study of human psychology and human nature. So the charts are kind of deep in the sense that they give you a kind of insight into how there's these three things, these roots that run deep on us all, that keep us from paying ourselves or from doing that this whole game is about. And so it's about getting control of those three roots. Yep, Tibetan dagger. It's you can look at it. If you look up Vajra Kilaya. Vajra Kilaya Buddhism. One of the highest tantric teachings in Buddhist tradition, Vajra Kilaya is the manifestation of all Buddha's activities in the wrathful form. The practice of Vajra Kilaya is an essential method to dispel the many obstacles that arise to block spiritual progress. Yeah, the dagger can also curse you too. You can expel. So what you do is you like hold it between your fingers like this, and you can kind of like concentrate and focus and take negative energy and dispel it and tether it and send it away from you. So it's kind of it's an interesting thing. You can read up more about it, but it's pretty cool. And it's kind of, it's a way to protect yourself. It's like a familiar, if you will, that kind of protects you, a thought form familiar. So we're waiting for the hourly reset of the 15-minute. We're going to see how this hourly closes. It's just kind of pinning here. Not giving us much of anything except for the cloud idea. We got above the cloud on the 30-minute, which is cool. And it's starting to shift a little bit. So you got the baselines above the price. Not looking so. So you should see that hourly do something where it tries to look for some sort of support in the downward area before it goes back up again. See it? Oh, by the way, the stochastic information actually updates every hourly candle close. So this won't. The only thing you can get in the moment of a candle close is to see how much it resets on that 1 minute time. So in that 1 minute, all of the data will update and lock into position, and it immediately jumps to its next position, which you can never see. So the curves and everything that happen in an hour don't get expressed in replay mode. So there's kind of like a once in a lifetime only opportunity to see it as it closes and what it does and how it jumps from, you know, this position of 90.47 to wherever it's going to go in this next 20 seconds or so. And so it could go, if it goes down like to 81 or something, you're like, oh, okay, so it reset it by that much. And it kind of gives you like a, like here, and so it went down to 78. So you went from 89 to 78. So you reset like 11 points of stochastic data. So this was an invaluable thing. In that 1 minute, you just saw how much stochastic got reset from that close there. And that also includes all of the other looked back data of all the candles into that formula of that reset. So you see how much gets reset in that moment. And so watching the candle close as it closes is kind of a little tip that's fun to see how much it gives back, and you can learn how much value that candle was in the stochastic reset. I hope that makes sense. So what we're looking for here is basically a kind of downward reset of the hourly and the 15 that holds in such a manner where it looks like, I mean, you kind of got almost like inverted head and shoulder vibes, but you could realistically come down to the bottom of this channel, the Keltner channel here, and ideally take some sort of idea bounce off of there on the hourly reset. And ideally you want to see this kind of come up to here without wavering from the last idea where we would go up here and then kind of come back down again of some sort. Oh. By the end of the weekend in the daily or weekly close. And that's where we'll leave you. It's just a short but sweet live stream, and thank you for sharing Swing Bee. That was fun. Does anyone have anything else to want to check before we say goodbye? Yo, what's up? Abdominal. Or abominable. Sorry, not abdominal. Alright guys, well then I will call it a short but sweet update. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Keyword being inextricable and inexorable. You cannot remove yourself from the moment. And that's where you can seek solace in the moment, knowing it's inextricable and inexorable and undeniable. So you don't need to praise anything that's already here, and it's always here and always happening. Light in the absence of eyes illuminates nothing. Visible forms are not inherent in the world. They're granted through the act of seeing. And though the mind and the objects exist independent of mind, they obtain no meaning in themselves. None that the mind is not guilty of imposing on them. Take care, my friends, and have a good weekend.